This week I want to talk about the US, which despite being the home of capitalism and the world's biggest economy with a special relationship to the UK, has been comparatively overlooked by British investors. You don't have to think the US is the Superman of the free world to wonder if UK investors are missing a trick. So far this year, the US stock market is the best performing developed market, even outpacing Japan's surging stock market. And if you look over 5 years, you see the S&P 500 index has delivered a total return of 66% to investors in the UK. Recently, there have been signs investors are getting the message with a leap in sales of North American funds. The question I want to ask is, with that kind of performance, should we regard the US as an emerging market? Many of us are used to thinking emerging markets provide the best returns. It's true, over 10 years, the average return of funds investing in emerging markets has been much higher than from funds investing in the UK, Europe and North America. But over 3 years, the situation has reversed, with US funds shooting skywards like Superman, leaving funds focused on other regions, particularly emerging markets, trailing. One reason the US stock market has done so well is because the country recovered more quickly from the financial crisis than we did. The US sorted out their banking system and got their banks lending again in a way we can only envy. But there are two other big trends starting to have an impact in the US which merit this link to emerging markets. The first is the renaissance of US manufacturing. The fact is that China is no longer the workshop to the world. Rising labour costs in China mean companies are shifting their factories to cheaper countries like Vietnam, Sri Lanka and Bangladesh. But they're also moving manufacturing to the US. Here's a list of companies that have either shifted some manufacturing capacity to the US from overseas or are considering it. A report by Boston Consulting Group estimated this could create 2 to 3 million jobs and generate an extra $100 billion in output by 2020. The second theme is linked to this trend for cheaper manufacturing, and it's the discovery of huge reserves of shale oil and gas, which could, according to the International Energy Agency, make the US the new Saudi Arabia for energy markets. So we have a cost-efficient workforce combined with an abundance of natural resources. Sounds a bit like an emerging market, doesn't it? However, it's important not to get too carried away. Although house prices are soaring in many parts of America and there's a general improvement in business confidence and employment, government spending cuts continue to cast a shadow over the economy. And the US stock market got ahead of itself, there's no doubt. But the fact that the Fed is considering reducing its stimulus efforts is a sign that the US economy is recovering. And the two big trends we've looked at today show that there could be a lot more growth to come, and that comparing the US to an emerging market is not as ridiculous as it sounds.